Hello everyone, welcome to the IchimokuCharts.com daily analysis for the Euro US dollar for Monday, March the 12th, 2012. Well, a continuation of the trend to the downside today, and here we have a candle that's made a lower high and a lower low. But a change of sentiment in the market. Once again, we see a white-bodied candle appearing after a large black-bodied candle here. We see the same happened after the market interacted with the top of the cloud, and today the same has happened. Previous day's trading we saw a large black body candle where the sellers were in control, but today, for today's trading, the buyers have taken control of the market and have shown some strong commitment to taking this market higher throughout the day. They've made net bullish progress, and it does set the market up for a potential change of trend, and the market's found support at the top of the cloud, and here for the last 4 out of the last 5 candles we've seen the market find support at the top of the cloud. Now, the market also found support at this 130.79 region that we highlighted previously as an area of potential support. If we look at the size of the cloud, however, it's becoming very thin as we trade further into the future, into the near future. And that does lessen the amount of support that the market will offer, especially as we trade down here coming into later in the trading week. And that means that if we do see some serious downside momentum, and looking at the series of lower peaks and lower troughs in this market at the moment, we have had a change of trend confirmed today with the market taking out the previous trough. There is still some serious downside momentum in this market, and there is a possibility that we could break through a very small amount of cloud and test to lower levels. Having said that, however, there is very strong support down below. Strong support at 130.25, we can see these swing lows, and then down to 129.68, very strong support. And through the cloud at the moment for today's trading, that will extend down to 130, but the support provided by the cloud is dynamic, and it will be coming up to meet the market at higher levels. In terms of Ichimoku, once again we are trading above the cloud, so the market maintains its overall positive bias, the bullish in the long-term time frame, but the market's bearish in the medium-term and fast-term time frames by trading below the Kijun-sen and the Tenkan-sen. Just looking at the configuration of the Kijun-sen and the Tenkan-sen, we've had a crossover of the Tenkan-sen below the Kijun-sen, but that's occurred in the candle that's currently forming. If we look at the candle that we're analysing here, the second last candle, that hasn't occurred, but if the market maintains where it is, there will be a crossover, and that's a bearish signal in Ichimoku charts. The only issue here is that it occurred above the cloud, so it is only a fairly weak signal. And if we think of the context of it, the price action is trading above the cloud, so the price action is likely to find support at the top of the cloud, so that's what makes it essentially a weak signal. If we do see the change of trend, and there is a possibility that we could see a change of trend, then we do have some solid resistance overhead. The 131.96 level is very important, and this area around here where the Kijun-sen and the Tenkan-sen are trading around 132 will be important. We also have resistance extending up to 133.20. So a market that's bearish in the medium and fast-term timeframes, bearish in the medium-term time frame in terms of peaks and troughs. We've had confirmation of that change of trend today. Previously we had the market trending up, but the market's done that on a bullish candle. So in the short term, in terms of bulls and bears, we have the buyers now supporting the market for today's trading. Are we going to see a bullish market for the next day's trading as we saw, and then the sellers come in? There is a possibility of that, but let's watch the high of the current candle for a potential higher high and higher low. Next, moving to the Aussie dollar US dollar, and here we see a change of trend in this market today, finally confirmed. The previous day's trading in bar chart terms was an inside bar, and it did raise doubt about continuation of the trend to the upside. We had the market trading within that zone that we highlighted previously, and it was a zone of previous resistance and support. And once again, we've seen price action rejected away from that zone towards the top. We had a bullish candle attempt to trade up to the top of the zone, found resistance at the Kijun-sen and Tenkan-sen, and then with the previous day's trading, a fairly substantial sell-off where the sellers gained some strong downside momentum. And now today the sellers have continued that momentum to the downside, with the trend changing, with the candle making a lower high and a lower low. Once again, a black body. The black body denotes the sellers making net bearish progress, but they made a smaller amount of net bearish progress than the previous day, so that does raise some doubt about continuation of the trend to the downside. And also, we've had the market close roughly at the midpoint level, and that suggests that neither side has control of this market for today's trading. Where we would have expected the sellers to maintain the control that they had on the previous day, they've lost that control, and that could be fairly significant. There is now potential for a change of trend to the upside. We also see this largish shadow on the bottom of the candle, and that represents the sellers losing commitment as they tested to lower levels. Now, it's little wonder that that happened, because the market is trading within the cloud, and the cloud, we know, acts as an area of support and resistance, and that's exactly what's happened here. The buyers have come in as the market was trading within the cloud, and it's a very large neutral zone in the market, a zone where price action is attracted back towards, and it tends to act as a dynamic area of support and resistance. Now, if we are going to see this market head lower, and there is a possibility of that because the trend is still down, we do have some decent support down at 104.50, and we can see here previous resistance that turned into support, and it may act as support once again for today's trading, so we do need to watch that level. Down below there, we do have potential for strong support down around the 103.77 area, and support from the cloud extends all the way down to 103.2360, so a lot of support down below. To the upside, if the market is going to trade up, we will have resistance offered at the top of the cloud for today's trading at 105.44, and then very strong resistance at the bottom of this zone that we've highlighted in yellow at 106, and that extends all the way up to about 107. Looking in big picture terms, we had the breakout from this broadening pattern. Previously, we had the market trending up very strongly. We saw the breakout down below the bottom of the barrier, and these broadening patterns tend to be major reversals at the top of an uptrend, and that's when we have the market making higher highs but lower lows. So it indicates a lot of volatility in the market in big picture terms, and certainly in contrast to the very efficient trending that we've seen in the market previously to the upside here. So now we have confirmation of that change of trend. We have the market making a lower peak and a lower trough. Here we have a peak, a trough, a lower peak and lower trough for today's trading. So confirmation of that change of trend to the downside. In terms of Ichimoku, we're trading within the cloud, so we have an overall neutrality in this market, a neutral market in big picture terms. But maintaining the bearishness in the medium term and short term time frames by trading below the Kijun-sen and the Tenkan-sen. The Tenkan-sen, if we look here, it's quite interesting that it's pointing down, and that's highlighting the strong downside momentum that we're seeing in this market in the short-term time frame at the moment. We can see here when we had these three black candles, the strong downside momentum, and we had the market bounce back up towards the flat Kijun-sen. It held as a resistance, almost touching up towards that level, and then the sellers came back in, and we have this Tenkan-sen, pointing down fairly sharply once again. So there is still potential for the market to trade to lower levels, but certainly we'd be watching that 104.50 level if the market is going to trade down lower for tomorrow's trading. So basically we don't have a lot of bullishness in this market anymore. Neutral in big picture terms, so quite a change in character in the market. Some strong negativity in terms of the Kijun Sen, the medium term time frame. Quite some time since we saw the market trading down below there, so there certainly could be a quite a change in sentiment in this market in those terms. And now bearish in the short-term time frame as well, and quite some very strong bearish activity. So let's watch the low of the current candle for a potential test to lower levels. The top of the cloud becomes very important, and the 106 level if the market is going to find buyers coming back in. Next, moving to the US dollar Japanese yen, and here we see a bullish candle, a white body candle following a small white bodied candle at the end of a downtrend. We did have the Japanese candlestick patterns set up for this market, the potential harami pattern and the tweezers bottom pattern, and that we have confirmation of that reversal pattern with the market making a high and a higher low today. So very often these tweezers bottoms and tweezers top patterns are very reliable indicators, and today we've seen confirmation of that. The previous day's trading, we saw the sellers lose commitment and lose control of the market. The buyers took control for the previous day's trading, and that also set the market up for that change of trend, and the buyers have gone on with the move to the upside. They've maintained quite a bit of the momentum that they had the previous day. They've made probably about twice the amount of net bullish progress than the previous day by extending the size of the body of the candle, but they did lose some commitment. We can see the top of the body of the candle with this shadow representing the buyers losing commitment, and that was as the market was testing up towards the highs here around 81.86 roughly. The market actually tested to around the 81.72 level. In terms of Ichimoku, the market remains bullish in all three time frames, so quite a strongly bullish market. Trading above the cloud, the Kijun Sen and the Tenkan Sen, and the Chikia span is confirming that bullishness that we're seeing in this market. So considering that the market's bullish in all three time frames, there is a strong possibility that the market will test to the resistance around 81.87 at this swing high. We are trading within this large zone of resistance that we identified previously as being a strong resistance, and we saw that the market has sold off on two occasions. There still is a possibility that that could happen. If we see some bearish type candles coming in, then we could see a change of trend back to the downside. If we do see the market trending to the upside and testing to the 82.21 level, the top of this zone of resistance, we could easily see the market trading higher to 82.79 following that. No resistance between there and the 82.79 level. So for the next day's trading, obviously the current candle is important. Around the high where the buyers lost commitment, around the 81.72 level is important. Certainly the swing high up here around the 81.87 level, and then up to the top of the zone about 82.21.